Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, we're just going to go over what to expect this week. We've got a little bit of a macro Monday going on where we just want to give an overview of the big picture of the market to see, what we can think about in terms of the future. So, just coming up on Monday, we do have some 3-year inflation expectations that will be printing. I think those will be important numbers to look out for. Not sure if it's going to be the most significant, but it certainly could influence the Fed's thinking in a reasonable way, especially considering that last week's information was a bit of a mixed bag, right? So last week we actually had a whole bunch of indications that jobs just are not slowing down. I mean, we really have a very strong jobs market, right? I mean, people are like panicking, but sometimes, the people in the financial sector, like they run around with their, like chickens with their heads cut off, at these, kind of rural farms, right? And they're just like screaming out into the air that everything is collapsing. And the fact is that a lot of these numbers are incredibly robust. So I mean, this economy just continues to want to create new jobs, and despite the Fed's best efforts, they've barely put a dent into it, right? Quits, it's basically the same as last month. In other words, what the Fed has been doing to try to cool the market just isn't necessarily working as well as they perhaps would like it to, because we do have two jobs available for every worker that wants a job. And that's not sustainable. That's an overheated economy. That's going to cause, job inflation. It's going to cause, inflation in the market. And so, one of the ways that the Fed tries to, shrink inflation is to try to just squash down the economy to the point where maybe there's only one job available for every worker that wants a job, so that it's not overheated. And the challenge of that is that they could go too far, and then there might be less jobs available than what would people would want. And in an inflationary environment plus a possible recession, that could be disastrous. And so people are freaking out in the financial world because they're envisioning this apocalyptic future. But the fact of the matter is, just going by what's happening right now, we still have a very robust economy that's primarily getting hit by the energy sector and all of those issues related to basically food inflation. And we during the Trump administration we cut off trade with China, so a lot of those products have become more expensive. Than with the Russian thing, the energy and oil and gas became more expensive. And with Ukraine, of course, one of the bread baskets of the world, wheat and all of these grains became more expensive. And this stuff just has side effects, especially with China continuing to randomly shut down entire sectors of their economy, which manufactures for the world, due to their strict policies on the virus. It means that we have just been pummeled in the supply chain, and so inflation remains very high. But you can tell that, at least the American people, I can't speak for every country in the world, but at least the American people are still trying to grow. They're still creating new jobs. And, like this economy does not want to cool down. I mean, it wants to keep going. And so we can take a look at some of this stuff. Basically, last month we had 384,000 non-farm payrolls, and now we have 372,000. But the expectation was 250,000. That's how much that the Fed wanted to shrink. This just to stay on track. 250,000 was priced into the market, but in fact, it was extremely robust, very strong numbers, and that's not good for inflation. That means the Fed may have to continue to be a little bit more aggressive. Look, these numbers are at parity. The unemployment rate, this is extremely good, 3.6. That's just people moving around, getting a new job, and thinking about which job that they want to take. Like, that's extremely good numbers. The average hourly earnings, it started to cool down a little bit, but we're still on an uptick, right? So, labor still has the advantage, and the labor force participation is pretty much on parity as well. So there's no contraction in that. We can see that wholesale inventories are starting to be reduced a little bit, but there perhaps is a backlog still. And the thing is that some of these retailers are actually going to have a backlog that they're going to start giving discounts on. And you may have started to see that at stores already, but pretty soon we're probably going to start getting some discounts at the stores. And so inflation should start to come down tick by tick as the Fed's policies start to have effect. But we're just not 100% there yet, right? And of course, consumer credit is coming way down, which is a mixed bag, but that's overall probably for the better, considering that this huge bubble that we're in has been driven, but basically by unlimited credit and unlimited spending. Now that interest rates are higher, of course, it's going to be a little bit more difficult to get loans, and that's actually a good thing. Loans represent money. Okay, so there's more money in the system, then money becomes worth less because money becomes less scarce. There's more money out there. And so money becomes worthless, right? That's the problem when you just, release unlimited trillions of dollars of loans on the economy. Money becomes worthless, even if it's just in the form of loans. You don't actually have to print money. You can just have low interest rates, near zero interest rates, right? And the private companies extend all these unlimited loans because it's free money basically, and it's just on paper, it's just numbers written down on paper, but it has a dire effect on the economy. And so this week we are going to be seeing whether or not the 3-year inflation expectations are coming down or not. But most importantly, we're going to get those CPI numbers on Wednesday. And so Wednesday, perhaps there might be some leaks, Tuesday night or in the early morning before, in the early hours of trading. You might see some, kind of shenanigans depending on who's sharing what data. So just to be careful Tuesday evening and Wednesday morning, because those CPI numbers, they're going to control everything. And if the expectations aren't met, then perhaps we're going to tank, right? If they're exceeded, then perhaps we're going to pump. So, and by the way, this would be the reverse, right? We actually want to see these inflation numbers come down, right? So when I say exceeded, I mean lower figures than expected. And by the way, we also have the chance of just some of this information being leaked on Monday morning. So Monday morning could also give you a little bit of a curveball. So, if you want to just take it easy with your trades, I'm not trading right now. I understand this week is going to be volatile. I'm just going to watch the show play out and then decide based upon my own intelligence using the CPI data what the bottom line looks like potentially for the Fed. And then, of course, the Fed will make their decision later in the month. And just to kind of hammer this home a bit, if we take a look at the monthly, um, just looking at stocks on the monthly, yes, everything is contracting, right? Like you can tell that there has been an effect on this market. Most of these sectors are actually down, which is what the Fed wants to see. It wants to see the economy cooling. The Fed is not trying to collapse the stock market. That's not their intention. They're not trying to collapse crypto. They're not trying to collapse stocks. What they're trying to do is just, cool down the economy. They're trying to get these companies to stop issuing unlimited loans, stop taking unlimited loans. They're just trying to, have them stop setting up new divisions and hiring people. We don't have enough people to fill all the jobs. They're trying to cool down this overheated economy that was, just a completely burnt out by $9 trillion dumped into it, unfettered, irresponsibly unmanaged in any way, and nobody had to pay it back or anything like that. And so this money just went into inflating stocks, inflating crypto, and it's now time to pay the piper. We're paying that in the form of inflation. We're paying that in the form of the bubble bursting. And so, if you don't want regular people to have to pay that at the pump, pay that in terms of the cost of their bread and milk. If you don't want regular people to be suffering under inflation, then you have to cool down that economy, even if it hurts Microsoft CEO's bonus or whatnot, right? Even if it gives Tesla a little bit of a headache, which, by the way, Elon does plenty himself, but we won't go there. Just wanted to say congratulations to your babies. And, I think he has like 10 kids now. Not really sure who the women are. I think HR does. Okay, moving on. That's the monthly stocks. But what if we looked at just the last week stocks? In the last week, stocks are pumping, right? This isn't what you want to see if you're the Federal Reserve. You don't want to see all these indications that we've been talking about being kind of mixed, like some good, some bad, and then some, kind of questionable. But then the stock markets have decided that they've hit a bottom and they're going to turn around now, right? From the Fed's perspective, that's not a good thing. If the Fed's data is mixed, but stocks are they feel confident that they've overshot and they just want to start pumping the economy again, then that might end up being a mismatch, okay? So what we're going to have to find out is if, commodity prices have come down enough that perhaps the Fed can give us a little bit of a break, perhaps 50 basis points instead of 75 basis points, or if they just see everything as being too overheated and so they just throw that full 75 basis points on the market, potentially crashing us down, perhaps having a capitulatory moment, or maybe even going 100 basis points, depending on what the CPI data says. If the CPI data is no good on Wednesday, then perhaps they're going to just have to bring the ban hammer to the stock market and to crypto and just smack everyone down like whack-a-mole, because we're all ready to blast off to outer space, but the Fed needs to cool the economy down, or your mom and dad can't afford their grocery bills. Like that's the challenge, okay? It's either the transnationals, the billionaires and their retirement, or it's the bread and milk of regular Joe Schmoes out there just living their life, but not part of that stock market. And of course, since the stock market was pumped up artificially with free money, basically the tax dollars of mom and dad, Joe Schmo, right? I mean, like, let's just think about what's really fair here, okay? Like, if you didn't take your profit, like, if you didn't take your profit on that, that year and a half, that like almost 2 years of just incredible bull market, then I'm sorry. Like, what else do you need? Like, that's your fault. Okay. So now's the time to help out, those who may not have been involved in that and whose money was used to fuel that. Okay. In a very reckless and irresponsible way by both the Trump administration primarily and then also the Biden administration until he got his stuff together and made a U-turn and decided to fight inflation, which we had to do. That bubble was going to burst at some point, and the bigger it got, the harder it was going to fall. So better to do it early on. And the complaint really is that he should have done it even, a little bit earlier, maybe 6 months earlier, 9 months earlier, something like that. But if we just move on, let's go ahead and take a look at this one. We also have the earnings reports coming out for July. A lot of this is going to be in the middle of the month, towards the end of the month, around the time that the Fed will be making their decisions. And so, depending upon the earnings reports, this could potentially also contribute to a capitulatory moment on the chart, which is to say that the stock market could just dump, crypto could just dump, because if we see either the Fed increasing interest rates, higher than expected, or even just being very tough, and also earnings being pretty bad for many of these companies, then we're already starting to see recession fears get you know added to the burden that stocks are shouldering right now. It's not just the Fed fighting inflation, but it's also the fact that they're starting to build in the possibility of a recession. And while we don't have a confirmed recession yet, and again, like the jobs market is extremely strong. If this was a recession, it's the weirdest recession. It's just not really a recession yet, guys. Okay, like we have a lot of weird dynamics built in since that era of free money, and we're seeing a contraction based upon a false pump, right? You got to get that through your head. Like a lot of a lot of the politics out there is just kind of screwy. Okay, like we had $9 trillion of a false pump. Okay, that wasn't real. It was just fairy dust and stolen money from the middle class, basically dumped directly into the pockets of basically internationalist billionaires. And there's no other way to say it. It was the greatest theft in the history of the world, the greatest transfer of wealth in the history of the world. And people in crypto should understand that there's a lot of weird Ponzi like stuff. There's like that Do Kwon kind of weird Luna kind of Celsius kind of stuff going on, that that Doge, that kind of Elon Musk pumping Doge. He's not pumping it for no reason. Somewhere he's taking profit. Somewhere his friends are taking profit. He's not going to do anything with Doge. A lot of the people, a lot of these transnationalist billionaires are just kind of sick in the head, and they have it in them. That's how they got to be where they are. They have it in them, that natural drive to take resources from here and take resources from there and put it in their own pocket. They know how to do that well. And when you get a class of them together writing the rules, it just ends up that they win every single time. And so, now we have this type of recession, which does spook them because that hurts their bottom line, right? And so we're going to start getting a lot of resistance, and we're going to start seeing the possibility that the Fed might take a holiday, especially when politics season starts coming up. And so I just hypothesize, okay, this is just my theory, my hypothesis, that we're going to have a potential bounce coming up, and I'm going to show you what that might look like in the charts, right? So to do this, I'm not really going to look at Bitcoin. What I'm going to do is look at stocks. And I've outlined it here for you pretty boldly. Okay, so this is my bold projection, and don't take it as truth. It's just what it is, right? It's just a hypothesis. And so I believe, as I've been saying for months, and the rest of crypto seems to have finally caught up, that we are in a stock super cycle, not that stupid crypto super cycle that ran on Crypto Banter was talking about. That guy is an idiot, right? But basically, I'm talking about a stocks super cycle, right? And the natural pattern of the super cycle is going to be something like this. However, we did have that crash in 2020, right? Which just brought us here. And then we had like $9 trillion just blasting us up to the top of our channel. We didn't get to have the smooth curve that we could have had, right? So instead we had this kind of, just forced curve straight to the top instead of a smooth curve, right? Trump did not want to be seen as a sideways market president. This was the market just going sideways, right? And he got some pump right here, and then he got a crash, and he did not like that. So he put $5 trillion of your money into internationalist billionaires' pockets so that they could buy back their own cheap stocks during this dump. Yes, Donald Trump stole from you, right? He stole from you and put it in the pockets of internationalist billionaires to pump their stocks to high heaven. And in the first year of the Biden administration, he was like, well, I don't know if I want to be the guy that crashes this market, but there was an obvious limit to this. It was going to happen. The Fed waited to the last minute. Of course, Biden isn't in control of that. They did have to make their own decision. The Fed, which was hired by Donald Trump. And guys, okay, like we have to be realistic. We have to understand what really happened in history here. Okay. Yes, you can pump something if it crashes. That's fine. America does that all the time. Obama did that. I don't know which one, when was this, right? It was the 2008, the man, it was the 2008 crash, right? And so the Fed came in and stepped in and provided a little bit of rocket fuel. And, we all kind of like partied. Cool, we had a bottom, right? We had a bottom, and then we kind of returned to this norm. There was a little bit more printing that should have, that went on there, and then there was this kind of like pump, right, during the end there of Obama, and just Trump continued that, but he just went on full blast, right, full blast after the Corona issue. And so, guys, that's the real history, and we had this pattern printing. So now we have to ask ourselves, how hard is this thing going to come down since it went up so striking? It's almost vertical, guys. Like, this is a freaking joke, okay? Like, that's a theft. Right? That is a shit coin, right? That is an altcoin. That is a meme stock. That is not the real economy. Okay? Nobody was a good president for making that happen. That was a theft, and people should be arrested and put in jail for that. Cough, Jerome Powell. Cough, right? And so, look, we're now reflecting down at the same rate, a little bit faster, of course, because you take the you walk up, right? You take the ladder up, and then you take the elevator down, right? And so we're falling down a bit faster than we got pumped up. It's just usually the case in these type of downturns, right? Step ladder up and then take the elevator down, right? Step ladder up, take the elevator down. That's just how markets work, right? They don't give you a lot of time to get out of your position as people start panicking. But they do tend to put in some pretty interesting formations, and Elliott waves are one of them. I'm not a big fan of Elliott waves, but because you can always fidget with them like just infinitely, right? But when you combine them with support and resistance, you can start to get some type of structure, and so I'm okay to use them. And so from my perspective, and I'm not taking advice from anyone on this. This is just my own idea. I would suggest that we have either bottomed for this a third wave down, right? If we're doing like a 5 Elliott wave down, then I would suggest that we just either bottomed of the third, or we're going to have one last, maybe double bottom or kind of capitulation in the stock market, right? And this may have an equivalent in crypto, which may be maybe even a bit lower than the low that we just had at like 17,500. Maybe Bitcoin could hit like 16,500, right? So maybe some type of double bottom, or maybe even a little bit lower, and then a push. And we wouldn't want to violate the first wave. It's just some type of trading principle. It's one of those nonsense garbage things that people just made up, and then everyone started following it, and so all traders obey it, and so it doesn't get violated. Self-fulfilling prophecy, right? And so I would suggest, just again, just coming out of my own mind, that basically 13,000 is our upper limit here, and that would correspond with this potential long-term downtrend on the Nasdaq 100, right? So the Nas 100, and so that's 13,000 on the Nas 100. And then if we went over to the S&P mini futures, then I would suggest that that would be perhaps 4,200 would be the upper limit that I would suggest. And all of this would take place over the summer, assuming that we either have bottomed already. Oops, probably shouldn't have moved that. That we have either bottomed already on this diagonal support, or that we're going to have one last drop before we pop up, which would be kind of like at the bottom of that zone, right? Somewhere like that, or maybe in between, right? I don't exactly know how the market would find its footing. That's up to the market. But basically, if you just step back a little bit, right, join me in a 20-year adventure of the stock market. Yeah, you can see that we do have this kind of diagonal support, right, that kind of has like a little escalation right here. It's not perfect, but in general, we have this little mid-range zone, which would be a very nice bouncy zone. It was a nice rejection zone several times. And so it could be a nice bouncing zone as well, right? And I just propose that if we are forming this kind of macro Elliott wave on the stock market, that would be a brilliant spot to bounce. And so people who are just screaming like chickens with their heads cut off, right, running around, just panicking, the sky is falling. I mean, yeah, maybe we're gonna get like one support level lower, maybe a couple support levels lower, but I think we're gonna pretty much bottom out at some point pretty soon because of this kind of support area. And then most likely, if history has anything to do with it, we're going to have some type of midterm elections bounce. We're going to have some type of summer bounce. We're going to have some type of Elliott wave bounce, which will not violate the bottom of the first wave. And so for the S&P 500, that would be approximately that 41,000, $42,000 area, and it could be a little bit lower, but that would be in line with our trend, and so also a quite reasonable expectation. It would form a bit of a double top right here, and so we could expect that we would continue down with the rest of the leg, perhaps just to the same support, and then we could actually end up going sideways. Why do I think that's possible? Because we just talked about it. We have this weird little middle area, right, that acts as support. And so if we just, started to go sideways on that support, and then over time reach the bottom of this, this kind of macro channel, right? That would actually, satisfy the wave, and we would bottom out, maybe in a year, maybe in a half a year, but just by going sideways, we wouldn't have to do the full drop down. It doesn't have to be as traumatic as people think. And think about it, we don't know when the Russia war will end. We don't know when the Federal Reserve will stop increasing rates and may even start to back off a little bit. We don't know when the Chinese supply chain might just end up opening up and they change their COVID policies. We don't know when different supply chains channels might be able to step in and supply that oil, that gas, that the wheat, whatever. And most likely it's going to continue to be difficult. That's why I suggest that we do come down again, perhaps here, right, and sideways, or perhaps just a real capitulation and then sideways. Maybe we don't make it to the bottom of this channel, but I think that at some point we can be hopeful that this thing's going to just start to accumulate and that it's not going to be as punishing as we think it's going to be, but at the same time, it's not going to be as easy as what people will want to believe if we do get some type of summer bounce. And this is just a hypothetical high. It doesn't have to get that high. This fourth wave could be flatter than expected, right? Because this was quite a sharp drop. And so typically the fourth wave will be flatter depending on how sharp that second wave was, and then perhaps, a quick capitulation. I don't know, but we'll find out. And I do think that if you look at the charts of crypto, they are telling us that things are starting to get to those lows that don't really make sense to go any lower. And when you're starting to see a lot of the assets in the market like start to print those patterns, then things are representing very good values. And the value that it presents to the market is when buyers will step in. And so any positive news, anything that the Fed could throw at us, like anything could be a trigger to a summer relief rally, not a bull run, not an all time high, but a summer relief rally, which then, by the end of the year, might have some, sense knocked into us. And so, yeah, this wave doesn't really have to do anything, you know, anything except not be as dramatic as this second wave. So it's not going to be something like this. It's not going to be a vertical necessarily. It might just be, some type of, flat printing over time. It could even be like almost horizontal, right? So, but the point is that it should have a little bit of an upward posture to it. And so, in other words, if Sam at FTX or whatever, says, that crypto has bottomed, maybe he's right. And maybe the fifth wave just ends up, just going kind of sideways, going like this to trend. And then we basically double bottom in some type of quarterly backfill, perhaps at the end of the year, maybe even after midterm elections, something like that. And then we go into an accumulation, right? Now, since this was um, a macro super cycle, there's always the possibility that once we get there and start going sideways, that later on we have another dip, perhaps due to some world crisis or something like that, which then feels very similar to this first one. And you saw this, and then you saw this, right? But the thing about that was this was the year 2000 and this was the year 2008. So, hey, if we just chopped sideways and up for 8 years, I think we would all be pretty happy with that. don't you? I mean, yeah, maybe it would take 8 years to get back to these, even these mid highs, maybe like 40,000, right? Some kind of ridiculous, low number on Bitcoin now that we're all used to like, 69,000 or whatever. But the fact is that that 69,000 price was artificial, and so if we come back up to 40,000 after having dropped to, let's say, 15,000 or something like that, or 11,000, or maybe even just this 17,500 was the bottom, like Sam thinks at FTX, then perhaps chopping our way up to 40,000 is just a really nice investment, right? In the meantime, your altcoins could still be experiencing some type of, blow off tops, during that process until this economy, finds its way, back down to the bottom of the channel, which over time actually rises, right? And so it doesn't have to be as harsh necessarily as, as the fall at the top. We could be at the bottom, chop up, have a nice kind of bull run. Altcoins do their kind of blow off top thing. Bitcoin doesn't really deliver the goods, but does a noble attempt. And then we have a decrease in the market, and maybe we just chop that out just a little bit more organically than what we're doing right now. And that would be very reasonable, okay? That would be very reasonable. It would be kind of a cup and handle, if you can imagine that, which would just bring us down to the bottom of the channel. And guys, I don't think you're hearing anyone else tell you these type of things. So please, like and subscribe if you like this type of content. I'm working very hard just to think these things out for you and share those thoughts. You can also join the Discord in the description. And if you want to share these ideas, then please give me some credit and say, hey, I heard about this from my friend Skyfi over at Alpha Commission, and that would be pretty cool for me, since, of course, new channels do struggle, especially in bear markets. But yeah, guys, that's why I'm a little bit optimistic. That's why I had that kind of long trade yesterday, which then I decided to change my mind. And hey, it's a good thing that we did, because if we go back over to the Bitcoin chart, you can see that we did have a pretty traumatic drop there. We are finding our support, perhaps in this 400, $20,400 area, which I think, well, I mean, there's, we almost found a support. It's been moving down, it looks like. But perhaps we're just going to do something like what we did in this previous area up here, which, just it looks a bit different. This one was a vertical drop and a bounce. This one looks like it's just going to kind of chop. But, let's see if it just starts to kind of accumulate here and maybe has a pump, right? And then maybe a fake out or something like that. And then depending on how the CPI data is, right, later this week, on the 13th, let's see, where would this pump be lining up with? The analogy of this pump, what would that be? That's the 13th, right? What did I say is the date? That's the 13th, right? The CPI data. Yeah, look at that, man. And they say crypto is, they say crypto is programmed, right? They say, it's that's the market makers just creating the patterns on the charts. But hey, that pump doesn't look programmed at all, if it does pump. Or it could also be a breakdown. Sometimes you see a breakdown if it's the opposite situation, and it's the same amount of energy in the system, but then you get something, maybe like that, or maybe the reversal, right? So sometimes you see a reversal pattern. So don't just expect that fractals will play out, but right now it does appear that this fractal is still playing out, and so we got that, that drop, and then a chop, and then a pump, and a dump. And if we get another pump and then a mega dump, don't be too surprised, okay? That does follow a lot of what I was saying there. And then look, um, just based upon this kind of macro channel that I have drawn out here, we do have some mid-range support in this area, just if it does follow any type of logic that it's used in the past, which potentially, we could get hung up on, even if we blow through it and then we kind of like get hung up on it, right? Perhaps coming down to 11,000 and then chopping back up to like, 16,500, perhaps doing another one of these formations and then bursting out. Unless the CPI data is good and the Federal Reserve has really great news, in which case maybe we pop out early and break the curse of this previous pattern, right? So, guys, that's what I've got for you. I'm really glad that I made that kind of error that I had yesterday into a lesson to put on the YouTube. I don't want to be thought of as perfect, but I do want to be known for being able to identify things and making good decisions as to when to cancel a trade. And hey, we could have turned that into a short, and that would have been a great, 5% move, if not potentially more, right? It looks like it may want a little bit more, but so for you guys who short, which is probably a pretty good idea in a downtrend, but for those of you who short, that would have been a nice 5% move, even if you were just using my kind of stupid fractal idea. You can see these crossing lines and this white diagonal. I had the concept that fractal would play out. Um, and I traded against my own ideas. So that's why I canceled my trade. My indicators didn't agree with the bullish perspective, and I'm really glad that I put extra thought into that trade. Always double check your trades, guys. Like, don't just burn money. This isn't a casino, right? This is work. This is a job. And if this fractal is playing out, then what I would expect is for us to just well, this one's chopping down. This one like had a traumatic drop, but then it kind of chopped up. So I don't know if it's going to put in a different pattern or something. But what we would just expect if these diagonal supports and resistances, do have effect here, is that maybe there's a little bit of a pump, maybe not. But perhaps we get a little bit of a double bottom there, or maybe a double bottom here, a little bit of a chop, perhaps a pump, and then the market just makes its decision, right? Now the Fed is actually going to be making its final decision at the end of the month. I believe it's going to be on the 30th. I don't have that meeting date. Let me just type it in. See what it says. It should be July 26th through July 27th. So where's the 27th? Let's just go ahead and mark that. Let's see, July 27th. Wow, that's pretty far out. Now, do you see how far out that is? That could be another cycle, right? So, hey guys, I don't know. These markets move in mysterious ways. You know what I mean? That invisible hand of God that Adam Smith talked about. So perhaps we get a dump, maybe a drop to 11,000, maybe a wick back up to like that 14 or maybe even $16,000 range, right? Something like this. And the Fed delivers good news. Maybe they back off a little bit, and maybe that was the bottom of the market, right? Maybe that was the bottom of the market, and we start to get our summer rally, perhaps to if we're thinking about Elliott waves, right? Perhaps to no higher than 33,000, no higher than 33,000, is what I would say, right? We're basically going to limit ourselves by the low there. And so if we could get back up into this region, let's say that we drop first, that could be a, that could be a 200% run, guys. It could be a 200% run. And let's say that we break out here. Let's say that Sam at FTX is right and that we've already bottomed out, even though he didn't give his reasons, but I've given mine. So let's say that we've bottomed here and that we pumped. It could be a 60% run, okay? And that's the upper threshold. Now, what could support that is that we do have those CME gaps over here at 35,000 and another one at 28,000. So what if, guys, look how this is all coming together. What if we just, did a pump, kind of a fake out spike to 35,000, filled in that CME gap, filled in that other CME gap, and then chopped around probably, right? Because this is going to be a big range to play with. And then maybe sometime next year or the end of this year, we kind of double bottom at some point, a little bit higher perhaps. And, then we just accumulate for however long it takes to accumulate, right? And it could be a very long process. But guys, I don't know if this theory makes sense. We could also, just because of the super cycle on stocks, we could also break up here and then go lower than what you could imagine. Um, Let me do the math on that. Why don't I just do the math, okay? So we don't know exactly where to target because we don't know where this market is going to break down to. But let's just say that first of all, we have the chance that we could just double bottom, right? Like this fifth wave could just be sideways. It could be a little bit lower than the third wave, but let's just say it's just sideways. We just double bottom. So 17 and a half approximately. Could be 16 and a half, could be 18,000, whatever. We basically double bottom, and that completes our fifth wave. But let's say that we go down to support, and what would that support be? So let's see, where are we right now? That support would be like 16%. So that would be 30% down on Bitcoin uh, using the NAS 100, not using the S&P. So using the NAS 100, 30% down. Let me just get rid of this crud, the good old crudola. There we go. What's this one? Let's get rid of that guy too. Get out of there. All right, so let's just say 30% down. What's that going to bring us to? Well, would you look at that? Would you look at that? Right to my mid channel at approximately 14,000. What do we have going on at 14,000? Let's see here. Oh, what do you know? We have this little mid-range peak. Okay. I mean, it's as good as any other place to bounce. We also have, the top of this, the previous blow off top, we have the top of it being basically supported at 14,000. So 14,000 has all of these contact points, and that would be a pretty modest lower low if the fifth wave is lower than that third wave, okay? Instead of double bottoming, like approximately where we've already hit, let's say that um, we have a lower low, but just a modest one, then 14,000 is quite reasonable. And if we just take a look at our good old Fabolas over here, then you could see that 14,000 would be in between the 786 and the 886, which is a place that's pretty reasonable for a bottom of a macro cycle. Okay, that's a very good area to end on, and I wouldn't be too afraid to buy any bounces in that area, because I do believe that we would trade in a range up to 35,000, you know, over time. I don't think that we would be trading up to 60,000, but do I think that we could be trading up to 30,000? Yeah, of course I do. So buying around, around 14,000 isn't the scariest proposition that I have in my head. But of course, we could go lower. So let's go ahead and jump back to the good old NASDAQ Rooney. And what could we find as a possible other support point? Let's say perhaps here, just a little bit of a support below that. And that would be approximately 20% down. And then let's just say that we go the full Monty. We just plummet to the bottom of the depths of this channel. Let's just be kind of modest here and just to put it in the middle of the range, right? So this area is pretty much the same length as this area. And so let's go ahead and just see what that would be. That would be 30% down. Okay, so now we're talking about perhaps 40 to 60% down. And let's just go ahead and see what that would look like on our poor Bitcoin that we're going to completely decimate here. Let's see, where are we? We are right here. So 40% would be 12,000. So basically the top of this formation right here, and also the peaks of that nice bouncy wick right there. So basically 12,000 to 11,000, we could say. And then what would be 60%? Not to terrify you. Yeah, totally to terrify you. That's literally why I'm doing this, is to terrify you. So that would be, well, holy schmokies, okay? That would be Bitcoin, that would be Binance's scam wick at $8,200. Remember the Binance scam wick? Guys, I showed you the Binance scam wick. You guys got to look up that previous episode that I made on the Binance Bitcoin scam wick, because it's pretty interesting, pretty interesting. And if this market is manipulated, and if we end up going to if we end up going to 82 or $8,200, then guys, I don't know, but maybe Binance engineered this crash or something.